mainstream crypto adoption is the main subject for 2025 and beyond. The United States and this current administration wants crypto to be popping in the United States. The US wants to be the leader, and so do all these institutions like BlackRock, JP Morgan, Citibank, all of the mainstream media, financial platforms. Many years ago, rather last year and the year before, you heard comments from Jamie Dimon, the CEO of JP Morgan, talking bad about crypto. Larry Fink talking bad about crypto. Now they're all on board and they're launching ETFs, they're launching products, they're launching services related to crypto. Now, let's start with the most important news of the week. House sends bill regulating stablecoins, a type of cryptocurrency, to Trump. That's the title on Yahoo Finance. And what they're talking about is the Genius Act. This is the Genius Act that has benefited Circle's IPO and Coinbase's stock tremendously recently. Here it is. The House has passed 3 bills intended to boost the legitimacy of the cryptocurrency industry with new regulations as President Donald Trump has pushed to make the U.S. the crypto capital of the world. Of the 3 bills, legislation to regulate a type of cryptocurrency called stablecoins has already passed the Senate with broad bipartisan support and will now head to Trump's desk. The other 2 bills, a broader measure to create new market structure for cryptocurrency and a bill to prohibit the Federal Reserve from issuing a new digital currency, which is the CBDC, will go to the Senate. So once the Senate makes a decision, we're going to get 3 bills headed to Trump's desk, and they're all going to be positive for the crypto industry. That is some big bullish news. Now, here's the next one up. Fort Worth becomes first U.S. city to mine Bitcoin. Fort Worth is the first U.S. city to officially mine Bitcoin. That's in Texas. City Hall has now host 3 mining rigs operating nonstop. So that's a rig on making all that noise, generating all that heat, but with the ability to produce Bitcoin. And then they got number 3 listed. The project will run for 6 months as a pilot program. And then in a groundbreaking move, Fort Worth, Texas has become the first city in the United States to officially mine Bitcoin. The bold step marks a significant moment in crypto adoption at the local level. So we got a city mining Bitcoin. We already hearing about Bitcoin crypto reserves. We got Bitcoin back above $120,000 at the time of this video. These are all great signs of Bitcoin adoption. We know Coinbase is allowing you to borrow against your Bitcoin for the collateral. That's positive. You got platforms like Moonwell in the Base ecosystem, Aave in the Ethereum ecosystem, where you can borrow against your Bitcoin. Michael Saylor, again, is right. Keep stacking, keep buying. Bitcoin saves the day. We got inflation going up. Prices are skyrocketing on electricity, and everything's happening. And Bitcoin seems to be that risk-on asset that everybody officially wants. But there is another, y'all. There is another by the name of Ethereum. Here it is. Ethereum ETFs set daily record with 726 million in investments as ETH soars. The 9-spot Ethereum ETFs generated more than 700 million in investments on Wednesday as the price rise to its highest level in months. Let's break this down. Bitcoin as a strategic reserve is a no-brainer now at this point. Families, especially when the dip happens, we get, I don't know, a $70,000, $80,000, $90,000 Bitcoin. It's time to stack for your family. That's the plan over here for the future, right? It could 10x in the next certain amount of years, maybe 2030, 2040, right? That's a nice return. Then we have Ethereum, which is the blockchain, smart contract blockchain that is going to accrue all the value from the stablecoin Genius Act, from RWAs, real world assets, all the stuff that's happening in the business world, that's going to be Ethereum as the first. And there will be more, but Ethereum will be the first after Bitcoin. And then why am I bringing up ETFs? Well, this is why it's important. You got Ethereum on the stock market now, along with Bitcoin. Now you got people like myself or other institutional investors and traders. You can invest in Ethereum without worrying about self-custody, without worrying about, anything about blockchain. You just know, I want the asset, tell my brokerage account, my brokerage people, go buy that for me. And then for the traders, if you want to trade Ethereum in terms of like options or futures, there you go. Now you don't worry about finding a platform that you can trade crypto in the US. You just go run an option play, a deep swing. You run a leap option. You run a shorter term swing trade or even a day trade right there in the NASDAQ on your Robinhood app, on your Schwab app, on your Webull or any of these platforms. They all have ETFs for crypto. So you got, my favorite is the iBit or iShares ETF, which is ETHA is the ticker. Then you got the iBit Bitcoin ETF. Them two are popping. Rising price, record ETF inflows. Is Ether turning the corner? I would say Ether is turning the corner. Bitcoin hits all-time highs. Now Ethereum is waking up, and when Ethereum wakes up, all of the rest of the cryptocurrencies wake up. And that's what we're currently seeing right now. Your favorite coin has probably made a lot of moves price-wise in the last week. Here's some key takeaways from the Investopedia post. The price of the cryptocurrency Ether is up more than 40% this month. On Wednesday, U.S. spot Ether ETFs enjoyed a daily all-time high inflows of 727 million, and more than 2 billion has gone into these financial products since July 4th. Likely reasons for the improved optimism around Ether include the expected passage of the Genius Act, which we got today in the House, in the Senate, and Clarity Act by the House of Representatives in their approval of staked Ether in the spot ETF offerings. They're talking about staking, which is basically a dividend for crypto. And if ETFs can generate revenue by staking, that's more bags for investors, more people buying. And here's the ETF I was just talking about. iShares Ethereum Trust ETF. This is the BlackRock. BlackRock will waive a portion of the sponsor's fee for the first 12 months commencing July 23rd. So this came out last year, remember. Investment objective. The iShares Ethereum ETF Trust seeks to reflect generally the performance of the price of Ether. Ethereum goes up, the ETF goes up. Since this is a spot ETF, which means the fund has to own ETF in proportion. So they're always buying now. They're always buying now. As more people come in, they have to buy more ETH. Why ETH? So you get number one, access. ETH enables investors to get exposure to Ethereum's native token, Ether, within a traditional brokerage account. I love this. Number two, convenience. ETH can help remove operational burdens associated with holding Ether directly, as well as potentially high trading costs and tax reporting complexities. Facts. And then number three, integrated technology. ETH is managed by the world's largest asset manager and leverages a multi-year technology integration developed with Coinbase Prime, the world's largest institutional digital asset custodian. BlackRock, Coinbase, you right here in the middle, making your bread, making your money, buying the dip, running the option play, all via the stock market. While the rest of us crypto degens, we got our ledgers, we're using Coinbase, we got our DeFi wallets. It's all happening. And there's a great reaction to all of this, a great post to Ethereum and in L2's in general, which we're going to be diving in to the number one L2 in a moment. So Katie Lee, she says, L2s aren't just scaling Ethereum, they're scaling demand for Ethereum. 50,000 plus ETH bridged to L2s weekly. Every week, 50,000 ETH. ETH equals 35% of L2 lending collateral. Every new wallet equals more ETH to hold, trade, stake. L2s turn ETH into the monetary base of the on-chain economy. Mainnet usage flat, doesn't matter. I agree. ETH bridges L2 50K a week. Each bridge equals demand signal. L2's actively scaling ETH demand. And then this is a chart right here talking about all the bridging. So it's like the main Ethereum, which is called mainnet, is just there. People are running nodes. People do use it. Then you got all that ETH being bridged over to the L2s. So you got another layer on top of ETH that allows us to make moves smoothly and easily, which increases the demand because you got to buy ETH. So when you buy it on Coinbase, you send it out to Base or one of the other networks like Arbitrum, Optimism, you're still buying regular ETH, and then it's being converted. So someone's holding the ETH, basically. ETH is becoming DeFi's collateral of choice. On L2s, ETH plus BTC is 60% of all lending collateral. Makes sense, the top two assets. ETH leads because it earns, secures, and settles. Bitcoin leans on Ethereum's rails for programmable finance.
Passive income. Gold in my dental. Thank God for my mental. Investor fundamentals. Told my girl it was simple.